Yo, yo. All right, let me make sure it's working. What is up? This is for ya boys reviewing liquidity. So I'm gonna go over the basics of this and explain it in the best way I can. There's a lot of good videos out there, and I think that's the main thing I'm gonna do is just send y'all videos or send videos in general to teach you more things because honestly, you can explain concepts better than I can. But I'm gonna try to explain in the best way I can for certain things. We're gonna remove the current indicator I'm using and go to what I'm discussing. So first things first. So the simple thing, and I know one of you, I'm not going to mention names just because this video might be up later on my YouTube channel as I document my own journey. But we're pretty much looking for highs and lows, and what is a high or low to identify liquidity. And let me do that real quick. Let me write down. Liquidity. We'll call it okay, sweet. So the first thing we're gonna find out is what are trading highs and lows. Pretty much swing points where we identify where liquidity is being built up. I'm just gonna make a little simple chart here. Sweet. So here we have I'm gonna, just to make it easier for you to understand, I'm gonna put it on the line chart. Awesome. Okay, so to simplify it without going through the candlesticks and more annoying things, it's just more in depth, but they're pretty easy to understand. We're gonna discuss liquidity raids. Let me write what else? Highs and lows. Liquidity. Draw liquidities. I'll explain what that is in a minute. It's going to be an unedited video, by the way, so you can skip around. Liquidity sweeps or raids. I like saying sweeps. And then what is liquidity? Sweet. Okay. So the basis are we are identifying highs and lows in the markets where buy and stop orders are going to be built up. So these are areas where people are in positions, they're hedging or they're putting on risk on these areas. So they'll be, let's say they're in a short position or long position, and they're usually, like most traders, you put your stop or your take profit, or your orders are above lows and highs. So your orders are going to be resting in areas that have made a mark on the market, a high or low, so somewhere to be protected. So these orders are going to be above highs, below lows. They're going to be above highs. They're just going to be in these general areas. And this is where the market's going to go to generate liquidity to make a move. So they're going to be moving to liquidity. That's what the market is always going to be looking to target liquidity and rebalance inefficiencies. And there's a deeper scale to it, but I'll make it simple. That's why liquidity is nice, because it's very simple. But the deeper thing of it is the book map, liquidity level, order levels, order flow. That's more deeper. You don't really need to know that. All you have to know is general highs and lows rules and how to find the fuel that pumps and activates your system. Because we need some sort of liquidity sweep, liquidity taken, or target in order to trade. What this gives us direction and bias. Okay, so what is liquidity sweep? A liquidity sweep is when a high takes out another high. And we'll go over some examples. It's super simple. So all it's going to do is it's going to raid a current high we have. See this high right here that the market's made. You can imagine, let's say there's like people in short positions here. So there's people in short positions. It could be us. It could be any other traders. It could be institutions that are in short positions from this area. And so these people are trading in a position here. And they're holding that position until they get to a target. So in order for us to make a larger move, we need to take out other buyers and sellers. So in order for us to generate to the downside and eventually go to this draw liquidity, which is going to be our magnets. All liquidities are magnets, and they attract price and they deflect price once price is taking it. So we're going to our draw liquidity. So what are we going to do? We're going to come up here in order to get down to this point. this draw on liquidity down here, this target we have. We're going to get up here. Price is going to pump up. It's going to stop out the people that are in the short position. Let's say there's like multiple millions of dollars in the short. That's going to be generated and used to fuel the next move. So once this is rated and it stops out the people that are in shorts, we're going to get more fuel to hit another, to go further down. So and let's say we're already in a downtrend from this position. We've been trending down to generate our move more. So then that's where we'll look to, as I guess you can call us ICT, smart money concepts, just as a trading system in general, is we're looking to buy or sell once these people are taking out of their positions, because that's when it generates liquidity, aka liquidity sweep. It stops out people and is now moving in the opposite direction. So once liquidity sweeps happen, this is where we'll be looking to take positions, because now it activates our area of interest. As we swept, we are now displacing in opposite direction, and it's activating where we're going to look. So yeah, feel free to put this on faster speed. I'm trying to explain, but I might be rambling on, so just jump around. Sweet. So what a liquidity sweep is literally that. There's orders at these areas. So there's orders here, which, I mean, to explain orders, it's just people, it's people's market orders. It could be investors, retail traders, institutions, anything, just orders at these areas. So these areas, they have to raid in order to generate volume. What did I open that up? There's orders here and there's orders here. So now, logically, we swept out this order, this area. Let's say there's multiple millions here. We swept it out. We're now displacing the opposite direction. So this gives us confirmation maybe for a entry trigger. We could take a, I'll make another video explaining fair value gaps, but I think I can do it in this one. We can take a trade off a fair value gap in this direction, off a EQ balance. There's a lot of different ways you can trade. You don't have to do a specific one. You just have to refine it later down to a model. So you could take a trade off it once we solidify that we're displacing out of this liquidity pool. So we'll talk about taking trades later. We're just going to talk about identifying liquidity. So order swept here, and now where we're obviously going next, we're going to the next order. So we're going down to this liquidity pool down here. So that generates liquidity. Let me look at some examples. And all liquidity is order, volume, and pretty much where money is stored in these areas. So I put the chart on the line graph just to make it kind of easier. I might do a higher time frame just to see. It's kind of easier to identify in the higher time frame. But liquidity is what generates moves. So I'm going to delete that. So we can go through the line graph examples. And you can see on the higher time frame, you'll see like massive liquidity sweeps that generate large moves in a direction. So here we have internal liquidity sweep, just taking out a low. We have liquidity sweeps here. You can see, let me zoom in and try to make it this more defined. Hold on. We're going to do a thicker line here so y'all can see that. So you see this liquidity sweep here, this high. This wicked up, took it out, and now we're displacing lower. And you can go on the lower time frame. I don't know if it's messing up or not. I hate freaking doing this crap on a laptop, bro. We'll just stay on this page and just talk about liquidity. So there we have liquidity sweep there, and where's our next target? Super, super simple. We control C. There we go. Copy and paste that. So where's our obvious next target? This low, right? We just swept out a high. Our next target is the low where we're generating more liquidity. We can just follow this up here. So now that we swept out a low, where's our obvious next target? We're displacing up. We're eventually going to get to this high. This is literally, I'm trying to explain in an elementary way just to make it easy for y'all. Here, shift. There we go. So next up, where are we going? We just swept out this. Maybe I can color code it for y'all. We just swept out this area. So this is already rated. Now we're displacing up to this high. It's not going to look linear. It might not look perfect. But you can see now we're in a buy model, buy program. We just took out this high. So we need more liquidity to generate a move. Okay, sweet. So what's our next target after we take this out? We're obviously bullish. We're looking for upward price action. We'll generate another one of these up here. Shift. Boom. Oh, my bad. Bam. We just took out this high. So where we go next, we're looking for another draw on liquidity. We're looking for something to manipulate to send us higher. You can see we didn't really get any sort of manipulation. If I can look on the candlestick charts, and we got a more clear manipulation, I think, off that rebalance. That's where I'm gonna talk about PD raise next, because PD raise kind of explain it more. But as you can see, we're extremely bullish, so we didn't really manipulate to hit the next target. So we're just gonna keep displacing. But I'm gonna do a line chart for now to make it simple. So simple. Here's a simple liquidity sweep model here. They call this a market maker buy model. You don't really have to know about that till later. But we're pretty much causing a sell model, taking liquidity, sweeping liquidity, taking liquidity, sweeping liquidity. We're always going to be moving in this type of way. When we're in a buy program, we're going to be generating liquidity, sweeping it, then moving, generating liquidity, sweeping it, then moving up, like that. And then the opposite for a sell program. We're going to be moving down, generating liquidity, sweeping it, moving down, generating liquidity, sweeping it, and then moving down. Get the point? Pretty simple. We have to have liquidity to fund a move. We have to have something taken out. We have to have manipulation of some sorts to generate a move in order for the market to move in a certain direction. So hopefully that makes sense. We can go look at more examples. So this is just like a 1 hour chart, so it's going to be like bigger swings. The daily chart is probably like way too busy. As you can see here, liquidity sweep at this level, liquidity sweep here. We have to always take something out. Liquidity sweep there. This is some funky price action. Cool liquidity sweep here. That's like a top tick, that sucker. Yeah, here's a simple market maker buy. I'll explain this. We're gonna do one of these. Bam. So you can see here, we sweep liquidity. We're moving up. We're gonna do this too. Liquidity sweep. I think is this Command T? That is not the right thing. You can see we generated liquidity for the sell side move. And keep in mind, I am extremely tired right now, but I want to make this video out for y'all so we can understand the concepts. And then obviously up here, bro, frick this crap, bro. We're generating liquidity up here too. So it's pretty much like trading support and resistance. If you know what that is, it's like areas of demand, and I'll explain support and resistance in the ICT framework. It's pretty much rejection blocks. But we're trading to these points. These bases are our targets, So if let's say we're in a buy from here, we can mark out our long position. Let's say we just took a buy from there. We're just expecting this to continue the bullish momentum after we've swept, and we're looking to look bullish. So it'll be something like that. We sweep, we re-sweep, we start displacing up, we take some sort of entry model, and we start trading with liquidity. We want to be trading with the trend so we can capture the move. So I hope that makes sense. This is going to be choppy in the higher time frame. Let me go to some New York session examples. And I'm going to move the candlesticks because that's what I'm used to. But please, if you haven't already, go watch a video on candlesticks. I'll explain what they are in a sense. Where's my sessions? I'll do this. Oh, this freaking indicator sucks, bro. Which one's New York? I need New York session, people. Hold on. Skip ahead of this. This is called making a video on the fly. Bet. All right, we'll do New York sessions. Sweet. So I'm going to do a 1 minute chart. That's what I'm used to. So we're going to go to New York sessions. And I'll explain liquidity here. Sweet. So here's today's example, August 13th. I think this was like a couple days ago. This is today. That was yesterday. Okay, never mind. So you can see is this New York. This was a massive displacement day. This was really good. I did sadly on my computer, but this was a good day to trade and take longs. So what's interesting is we didn't really get a lot of context for the long bias into the today. I won't be confusing, but let me just talk on liquidity because that's what we're discussing. So let's see, shift. Do this on here. So look, there's a liquidity sweep. Bam. we have an internal low here. I'll explain what a low is. It's where we have, let's say these are candlesticks, or these are levels. A low and a high, it's just the same thing. So say these are different candlesticks. These are wicks. So we're looking for that lowest point of the candle. That lowest point of the candle is going to be what we're going to use as our low. So bam. That's what we're going to use to look for that resweep. That resweep of price in order to find, bro, what the frick? That resweep of price in order to look, you can tell I don't like doing this on my laptop. To look for displacement. Okay. This is today. We'll go through liquidity today. We obviously took out this high here, funding our downward move. And so that created our sell model today. And obviously to generate the buy move, I did take longs this morning. That's what banged on my funded count. Generate the buy move, we took out this liquidity and we started displacing up. Then we took out the high liquidity and we just started displacing down. As you can see, we hit another internal high here. We take this out and now we're starting to move down. So we're pretty much just following price and the trend of price. So let's see what else I need to explain. Ready the drawings. I kind of like the whiteboard style because the price is going to be confusing. Y'all can go look in your own time and discern. But let me see. So we cover liquidity. Oh. Make this big so you can see it. Ha 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 ha. The trading basics. Let's go. All right. We cover liquidity. How do we find liquidity? What is liquidity? It is highs and lows in the market that the market has to take out, whether it's buy and sell orders, in order to generate and generate movement in the market. That's all it really is. So I'll just draw a little example here so we can see it. We're looking for that sweep in order to generate a move. So there's that. Liquidity here. Liquidity. Low-key, I might have forgotten how to spell, bro. I think this is right. What else should I cover in here? Candlesticks. All a candlestick is the interior price. So the candlestick's going to look funny, but I'll show you just an easy example. So let's give a bullish candlestick. So a bullish candlestick is called an open high low close. TF, bro. So a bullish candlestick is going to open, and I'll show you in what the candlestick looks like the form of a candlestick. We'll do this. Do I have red? Manipulation. Bullish. Generate. Here we go. So imagine this is a bullish candlestick, and we'll have our little wicks out here. Bro, Loki an artist right now, bro. Bam, bullish candlestick. Look at that beauty. How is this generated? Price has an opening price. This is where price opens from the next candlestick. And it's on time frames. So like that's why they have the time frames up here. We have the 5-minute, the 15-minute, the 30-minute. These are all relative ways to view price. So we open and then we drop, we manipulate something. We have a low, and we have a high, and we have a close. So the body is created by the in-between, between the high and the close. Because we open here, we drop, we take some sort of liquidity out, just like I discussed. We make a wick, and then we displace. We have a high of some sorts, and then we close. I wonder if I still have my indicator to explain candlesticks more, because I want to go more in depth for y'all. So you can see examples of candlesticks here. I'll zoom in. So I can explain this. So this will be liquidity and candlesticks. I'll title this video. Okay, so there was an indicator I had that like went more in depth. What was it called? Footprints. This might be it, but it might be confusing as frick. Let's do this. Was this it? Footprint charts. Maybe not. I'll just go through the basics of candlesticks. Here's a bearish example of a candlestick. We open high, low, close. There's a bullish candlestick. There's a bullish candlestick. There's a large engulfing bullish candlesticks. So I'm gonna send y'all videos because I feel like I'm explaining it poorly. I'm trying to explain it the best way possible. But I'll find some videos to send y'all and get this solidified down so you can have it. And then yeah, that'll be it.